Hello, it's Adil bringing you a review of the US markets on the 31st of March 2015. Okay, so I've already explained the fundamentals on the FTSE 100 FTSE 100 FTSE 100 analysis video on YouTube. I'll just run through the fundamentals again because it's always important to get the bird's eye view or put everything into context when trading. It's very important to amalgamate fundamentals and technicals, especially from an intermarket analysis perspective. Okay, so Asia markets down overnight. Shanghai down 1%. Hang Seng negated that to a large extent, being up 0.2%, and the Nikkei down 1%. So overall, net obviously bias was indicated negative from the get-go, from the open. We had the two wild cards, one being Greece, the second one being the situation in Yemen. The geopolitical and socio-economic concerns, so those two are collated together, indicated risk off from the outset, hence the reason why my bias was bearish, and as you can see my YouTube video I did argue for that. Okay, so now my FTSE 100 video I am arguing for a move higher, and I'll explain as to why I think the FTSE will move higher based on US markets as well, because they do, obviously they both are interwoven, and they do, based on intermarket analysis, they are interrelated. Okay, so cross market analysis. Okay, so we had the concerns also from with regards to Iran as well, the Iranian situation, so the risk off scenario from Iran. Now the situation with regards to risk off there is because, number one, you have the political uncertainty, because you have the both parties in political parties in the US obviously arguing. Then you have the Israeli slant as well with regards to Iranian deal. So obviously any political uncertainty can cause risk off, adding the fact that there is fear that if the deal does get done, then that will create a well, basically flood the oil market. And as we all know, the oil market or oil related stocks are quite heavily weighted in the S&P and the FTSE 100, also to the Dow to a certain extent, and obviously they get sold off, and therefore the indices obviously get hurt as well. Okay, so that's the scenario or thought process with regards to the S&P and why the FTSE 100 was down quite substantially. Now that's something that I didn't factor in. That's something that I will certainly put my hand up to with regards to today, because I got stopped out on the FTSE 100 twice today because I underestimated the extent to which the Iranian deal being signed would cause a risk-off scenario. And also with regards to Greece as well, everybody had expected a potential deal and nothing. There was no real outcome at the end. Okay, so that certainly isn't a good sign either going obviously with regards to today, but there is something that's being worked out in the background, and therefore Greece has been a real headache and a real concern for traders. But given the fact that the DAX recaptured 12,000, one can attribute it as noise, but at times it can be the real source for the sell-off as well, and the uncertainty in the markets. Okay, so that's my argument with regards to, or that's my explanation, should I say, with regards to the sell-off today. So the market has discounted the fear in Yemen to a large extent. It's already factored in and baked into the cake now. You can argue it is being resorted to as noise, or it can be downgraded to noise. Also the Greek situation, how long has the Greek situation been going on? Does it really affect the US markets as much as it affects the European markets? Not necessarily. So that's something that you certainly have to take into consideration as well. So all these factors come into play. Okay, now the additional insight here is obviously the US data. Now the US data today was overwhelmingly, I wouldn't say overwhelmingly positive, but overall one could conclude it was positive, given the fact that the consumer confidence data came out much higher than expected, and that, given the fact that that is referred to as forward expectations, that certainly does bode well for obviously the US consumer or disposable income and the spending pattern that comes along with that. So therefore that is a risk on situation. Okay, so certainly a bias bullish from that perspective. Okay, given the fact also that you had strong UK data and strong European data, that certainly did bode well, and that did alleviate majority of the concerns that were emanating with regards to the Greece and obviously Yemen wildcard. Okay, now stronger consumer confidence data is not just obviously will be strong enough to help the actual US markets move higher. Not only that, I also I need to point out the dollar index as well. Now this is something that I've already highlighted with regards to the FTSE 100 video, and it's very important as well. So you can see here the 10-minute chart, the US dollar index has a H&S formation. The 60-minute chart of the US dollar has a bear flag because you have a bearish engulfing candle and the consolidation within that in the lower part, and also the daily chart has a potential topping tail doji, therefore indicating a reversal. Okay, now not only that, you also have a very important observation here with regards to the emerging markets. Now this is something that I have highlighted. Now if I just bring the emerging market index up, if I can find this, bear with me. There we go. Okay, so you have an inverted head and shoulders formation. When you have an inverted head and shoulders formation in the emerging markets, that generally tells you that the Aussie and the Kiwi are now about to potentially move higher. Okay, and the dollar is potentially going to move lower. So a HNS and an inverted HNS, so a HNS and a dollar, inverted HNS on the actual emerging markets index, all bode well. Okay, for a potential move higher. Okay, all indicate a potential thrust higher in the global markets. Okay, so interesting observation there, and again supports my argument for a move higher. Okay, now let's have a look at the indices now, given the fact that I've explained the fundamentals and as to why the market's obviously at a risk off scenario. So let's go to the S&P 500 to start off with. Okay, so let's start off with the weekly chart. Let's get a bird's eye view as always. The weekly chart, obviously we have this inside bar, we have this key trend line that is on the verge of potentially either holding or breaking, and it's a do or die situation with regards to the index itself. So again, it's going to be very interesting and very important as to what happens with regards to the S&P, but it is an inside bar as of yet, so we are at a critical juncture and a crucial point. Now the daily chart was an inside bar, therefore it's bullish consolidation from my perspective. If the green candle was taken out, then obviously then we would argue yes, the bears have certainly taken control, given the fact that the economic data was relatively stellar in terms of the consumer confidence numbers that came out. Therefore one would, from my perspective, it's still bullish. Okay, 60-minute chart of the S&P 500. Yes, we have had some damage done here. Okay, so the 200 MA certainly held. We are coming back to this region here. Excuse my flu. Okay, at this very moment in time. Okay, so we basically have sold off. The bear flag situation obviously played out on this occasion. Now, given the fact that we've pushed back now into the 50% fib, also previous resistance equals support, we also have previous resistance equals support here, and we have another multiple array of support. So there's a lot of support for the S&P 500 this 60-minute chart. 10-minute chart of the S&P 500, we have this diagonal trend line, which is a key. We will need to recapture that and hold that to remain bullish. We have an unfilled gap above at 2085, therefore that should act as a magnet. We have previous resistance equals support. So there's a hell of a lot of support with regards to the S&P 500 in this region. Yes, we do have an unfilled gap below, but given the stronger consumer confidence data, I do want to err on the side of the actual bullish side on this occasion, and therefore I expect a potential move higher from this region. Okay, that's my expectations here with regards to the S&P 500 on a 10-minute chart. So let's see if we can get confirmation of this potential bullish scenario from the Russell. Okay, so let's bring up the IWM and the IWN, small caps and large caps. Okay, so this is the IWM, this is a Russell. Okay, so let's go to a daily chart and let's see if we can find any arguments here. Okay, so daily chart, we are within this red candle. Yes, we have obviously put in a doji, but again, it's an inside bar, so nothing bearish there from my perspective. A 60-minute chart, yes, we have pushed back, but nothing in to the extent of the S&P 500. So again, indicating to me a bullish move from my perspective. Also, we did put in a bottoming tail towards a close. Again, another positive sign. Again, the actual IWM or the Russell, as we all know, basically you are looking at a very, from my perspective, especially compared to the S&P 500, it certainly remains bullish. Okay, so we did hold that gap. Again, we did not put in a lower high today, and a lower low, should I say, and if anything, this is on the verge of a downward sloping wedge pattern and looking for a potential breakout higher. Okay, from my perspective, given the fact that we put in a base here, yes, we do have an unfilled gap below, so it certainly remains vulnerable to that, but we did hold the low. So there was no new lower low put in. It held a low. Therefore, from my perspective, it's bias bullish, especially given the fact that we had rising volume towards the close. So bias certainly stepped in. Very impressive. Okay, so the Russell, so the IWM, it certainly isn't showing any signs of exhaustion. The IWN, which is a small cap, okay, let's just observe that. Okay, again inside bar on the daily chart, so no real cause for concern. 60-minute chart, bottoming tails, everything holding well. Okay, 10-minute chart, again holding well, no new lower lows, no real cause for concern. So therefore I would certainly exercise caution with getting too bearish with regards to today's price action, and like I said, I would attribute it more towards the Iranian situation and the fear with regards to the oil markets being flooded. And that's my interpretation of the actual markets themselves. Okay, so again, no lower low, therefore bullish, therefore potential move for a move higher. We have this unfilled gap up here, which I expect to close above higher at 104, potentially higher. So again, interesting scenario. The S&P 500 is into support and is being confirmed by the IWM and the IWN. So very, very important to observe those two as well. Okay, so going forward. Okay, right, the next chart, let's have a look at the Dow. Okay, the Dow Transportation Index, again inside bar on the daily chart, so no real cause for concern. Therefore a bullish consolidation on the daily chart. 60-minute chart, again we're just holding this green candle. We have a bear flag scenario, which yes, we have to respect, but given the fact that the 20 MA is still sloping upwards, bias still remains bullish, and we still are respecting this key trend line here, and we're looking for a potential move or thrust higher. 10-minute chart at present, again we held the lows, same with the IWM and the IWN, so no real concerns with regards to that. Okay, so again, interesting scenario. Okay, very, very interesting scenario. Bear with me. Okay, so the Russell small cap and Russell large caps, again both indicating along with the Dow Transportation, no real cause for concern. Okay, the Dow Jones, let's just bring up the Dow Jones and look at the Dow now. There we go. Okay, so again, daily chart inside bar. Okay, weekly chart, as you can see, is still very important, very crucial. We have negated we have had a bearish engulfing candle, and we are fighting to see exactly what happens here. So with regards to the Dow Transportation still holding, therefore I expect the Dow to hold as well. So with the Dow obviously holding this inside bar, again from a daily chart I expect that to be bullish, but the weekly chart certainly is flagging a concern, and that certainly needs to be watched very carefully. Okay, 60-minute chart, again just yesterday's thrust we have held, especially if we take into account yesterday's thrust, or should I say the thrust from the 26th of March, and obviously the 27th of March, and obviously the market has moved higher quite substantially on the 30th. Okay, so we take the pivot low here, take it to the pivot high, we're into the 50-61% fib, therefore no real cause for concern as of yet. Okay, 10-minute chart, again we did have this inverted head and shoulders formation. The pivot low is which I highlighted over the weekend, 17,575, 17,800. So you are looking for a potential. Still, the inverted head and shoulders target hasn't been completed, but nevertheless still remains in play with the potential target to be hit. We have previous resistance equals support and previous horizontal support there as well. So two regions of support, but the Dow certainly is showing weakness. That's something that I must agree to. Same with the FTSE 100, certainly showing a weakness from that perspective. Okay, and something that needs to be watched very carefully. We do have a gap level below here around the 1727 and 1717, so that I'll be certainly watching that with extreme caution. But the Dow Jones compared to the Dow Transports certainly is much weaker, and that's predominantly due to the oil price potentially flooding. I think personally the oil market, and those concerns obviously weighing on the Dow as well. Okay, so that's something certainly to watch and observe with regards to the markets going forward. But again, into a potential support zone. That's the argument. Okay. with regards to Dow. So let's move on to the Nasdaq now. Okay, so the Nasdaq. Okay, let's have a look at the Nasdaq chart, daily chart. Yes, we have had a bearish candle closing today, so that's certainly a potential concern. 60-minute chart, we have held that previous resistance equal support, and the market has pushed lower, but hasn't negated the pivot low move from the 26th. So that's the important sign. Especially with regards to Friday's move, we are coming into the 50% obviously fib retracement, and that certainly needs to be watched very carefully. Okay, we have previous resistance equal support in this region here, so again that certainly needs to be observed as well. But it's a 200 MA that I'm interested in. That should be expected to hold going forward. The 10-minute chart, sorry, this is the biotech. Sorry, let me bring up the Nasdaq. I bought the wrong chart. 1 second. I'll discuss the biotechs because they are weak. It is very, very weak. Okay, so the daily chart, go to the Nasdaq here. So again, we're holding this key trend line on the Nasdaq. We have held that double bottom there, so that certainly is interesting. Okay, so previous resistance equals support, held that double bottom. We've come into gap fill, so again that's an interesting scenario. 60-minute chart, again, like I said, gap fill. Again, interesting scenario. Fib, if we use a fib, take the pivot high to the pivot low, pivot low, pivot high, and we are into the fib 50% retracement. So again, interesting scenario. So 50% retrace of that move. A 10-minute chart, if we observe, we're into gap fill resistance. I'll declare that I have gone long from the 4344 level because I expected previous resistance equal support to be held here, and obviously we had gap fill below at around the 4334. So I am actually long the Nasdaq at this very moment from 4342. Okay, and my stop loss is at 4312. I'm expecting 4372 at this occasion. Okay, from a 10-minute chart, so gap fill support. Now the biotech, certainly, again, if I go back to the biotechs, yes, we do have the H&S formation, so that certainly is a cause for concern and one needs to observe. 60-minute chart, yes, we have flushed back, but we are into that fib 50%, so that certainly needs to be watched. We do have this downward sloping diagonal trend line that obviously we have broken out of, so again, this is something that I'm going to be observing, and obviously this is what's indicating a potential. We had this downward sloping, obviously widening wedge, but expanding wedge, but again into that 50% fib support region. So this will be interesting to observe as to what the next move will be. 10-minute chart certainly is signaling caution from that perspective. Again, certainly something that needs to be observed. We have this gap fill support below. We'll see if that holds. Now we did have the inverted head and shoulders formation on the bio stocks, which did obviously play out pretty well, and we do seem to be potentially retesting that as well. So the pivot low there was 3500, the pivot high was 3620, so you're looking at a 120 point move, so you're looking at 3740. So certainly the target hasn't been met, and that certainly is a target that potentially needs to be met, and obviously a potential move higher beckons. Okay, with regards to the biotechs, but the biotechs certainly are the weakness, and that certainly needs to be observed. Okay, so the semiconductors, the next phase. Move on to the semicons. Okay, so daily chart, as you can see, double top certainly is in place. The semicons had an inside bar. This is again the reason why, even though I know the biotechs have been weak, but the semicons certainly had a inside bar. We are holding the technical pattern of previous support equals resistance, and that certainly needs to be observed very carefully. 60-minute chart at the moment, yes, we've had a thrust higher, but the retracement, as you can see, is feeble compared to, say, for example, to the Nasdaq. So it certainly is showing immense strength, the semiconductors, from my perspective, and we are looking for a potential thrust higher. Okay, 10-minute chart of the semiconductors, again showing good support, just like the Dow Transports. Also with regards to the IWM and the IWN. So again, no real cause for concern from that perspective. Okay, so again, argument from my perspective is that we are going to move higher at this juncture. Okay, now we do have this unfilled gap here on the actual semicon, so again keep an eye out, keen observation with regards to that. But again, very bullish price action on consolidation today for another thrust higher. So watch the Dow Transports, watch the semicons, also the Nasdaq, given the fact that we're into gap fill. Watch the IWM and the IWN. If they are bullish in the next 24 hours, the markets will certainly be rescued and move higher. If they're bearish, then obviously we know exactly what's going to happen. Okay, and I'll be happy to switch my bias. Obviously, I'll be stopped out my Nasdaq trade, and I'll be more than happy to switch my bias on the short side. Okay, folks. So risk on, risk off, wax on, wax off. Hope I've explained the technical and fundamental reasoning with regards to this market. Okay, goodbye now.